Let's get the technical analysis on FedEx as well as the rest of the transports. Go off the charts with Mark Newton of Newton Advisors. Mark, what do you see in this chart here?
Thanks. So technically not a good move in FedEx after hours as part of an already lagging transport sector. You see the stock down almost 5%. So for those not paying attention, you're going to come in tomorrow morning and see potentially free overnight shipping down to 172. So that's certainly not a good sign. And if you take a look at a daily chart of FedEx, you can see this well-defined trend channel over the last couple of years. All of a sudden, you see a breakdown into last December. We've seen a 20% bounce, yet this hasn't really recouped the level that it needs to think that this group can really outperform. So you've seen the air freight lagging, the airlines itself lagging on a monthly basis. So this is sort of interesting when you look at a monthly chart. It puts things into perspective. You have a 10-year rally in this. The stock pulled back to almost an exact area where it needed to, right at $150 a share. This is a 50% retracement of the entire 9 to 10-year rally in FedEx. And so, if anything, this suggests 150 is really a key level. 167 initially for tomorrow morning. Under that is 150. You cannot get under 150 without damaging the longer-term picture in FedEx. Transports in general, same picture. Broken a 2-year uptrend. Not a great scene for the transports. They've been lagging. A lot of that is the airlines and the air freight. This really, we were hoping that this could start to push up, but obviously after hours, a move in FedEx is going to be problematic to the scene for this sector in general. What is to like in this group? There is an area that stands out. That's the rails. The rails have acted much, much better. Stocks like CSX, stocks like KSU, for those March Madness fans, no, it's not Kansas State. It is Kansas City Southern. Stock has had a very good move. It's up about 27%. This area in general is going to be very, very important right near prior highs from late last year. If we can get above that, my thinking is the stock should continue to show a very good relative strength and outperform. So I would still bet on the rails. I don't like the air freight as much or the airlines.
Technically speaking, Mark, is Dow theory still valid?
Oh, I think absolutely 100%. You have to look at things where, does the transports and does the Dow, do they tend to move together? When you look at swing highs and lows, and those are different than really short-term moves that a lot of us, look at on a day-to-day period, but it absolutely should be taken into consideration. The Dow is still very relevant. It tends to move along with the S&P a very high percentage of the time.
All right, Mark, thank you. Good to see you. Mark Newton of Newton Advisors. So,
now, $20 if you've got the K-State mascot.
Oh. Shouldn't do that.
It's one of the most obvious mascots in college sports.
It's obvious?
Really?
As in, it's a very redundant mascot. It's everywhere.
What do you mean? What do you mean it's everywhere?
There are other schools with the same mascot. It's a very common
dog.
Wildcat. FYI, trade school.
The more you know.
Yeah.
So useful.
Right, you owe me $20.
He mentions KSU. Thank you. The Wildcats. All right. So KSU is domestic, but it also goes to Mexico. Mm-hmm. And so when there was the skirmish with Mexico, there was concerns there. But where do you stand?
And if you recall, that's a stock that traded. I think it had a 70 handle when at the peak of the whole U.S.-Mexico problem. It's obviously rallied considerably since. If you look in terms of valuation, KSU is probably the most expensive in terms of PE, and it's probably being rewarded for the fact it's probably one of the better run railroads. But you're running into trouble here at this 125 level that you last saw a couple years ago. Quickly with FedEx. FedEx is 37% lower than its all-time high, I think at 225 or something in the beginning of 2018. That's on an S&P 500 that's within a couple percent of its all-time high. You got to start to ask yourself, look, maybe FedEx, is it a bellwether? Well, if it is a bellwether, the S&P is too high. Either that or something's changing fundamentally under their feet.
I think the rails, to Guy's point, I don't even have to go way back. I'm looking at resistance in these just a couple of months ago. All the rails, the ones I'm looking at is the ones that Mark just mentioned, are running into resistance right here. It's a wall of resistance. It looks extremely double toppy for me. I would not be a buyer of the rails.
Whereas in the other part of the transport space, if you look at the airlines, you're not going to be surprised to hear from me that I think that they're very cheap here, and they're at the bottom end of a range. And arguably, there's been a litany of reasons why, but ultimately, what we're hearing from CEOs in their business class is alive and well. They're not seeing a fall down in essentially in their highest kind of margin product. It's really about capacity. It's idiosyncratic stuff with airlines. I like them.
I think the way that the market itself is trading is it's going after growth, and I'm not sure the rails have it. I don't think you get hurt in the rails, but I think in this particular market, you're going to want those names that are asset light, that can go after the growth, which again, unfortunately, is the FANG, the names we've talked about for about 15, 20 decades.